Social Security taxes, the truth behind the misleading claims. Despite what many residents of Ohio may have been led to believe, taxes on Social Security benefits have not been abolished. Key points to understand. The recent tax legislation does not include any clause that renders Social Security benefits tax-exempt. Federal taxation of Social Security benefits was initiated in 1984 as a measure to bolster the Social Security Trust Fund, which was on the brink of insolvency. A complex array of regulations concerning age and income may prevent some retirees from benefiting from the newly introduced senior bonus deduction. The misleading chatter surrounding Social Security and tax reductions for seniors in what has been dubbed One Big Beautiful Bill is likely to lead to a series of unfortunate surprises at tax preparation offices across Ohio next year. Many uninformed retirees are bound to be taken aback when they file their 2025 tax returns, asking, "What do you mean I still have to pay taxes on my Social Security benefits?" In July, tax professionals took to social media to express their dread about the impending reality check they will have to deliver to clients. Yes, your Social Security is still 85% taxable. I know that's what Trump keeps saying, but focus on what he signed, not just his words, lamented Adam Markowitz, a tax agent from Florida, in a post on X. What's causing confusion among retirees? On July 4, the White House reiterated its claim of no tax on Social Security when President Donald Trump signed what he refers to as the One Big Beautiful Bill into law. However, this statement is misleading. A mass email sent by Trump on July 12 echoed the same sentiment. The Social Security Administration, SSA, also sent out an enthusiastic email on July 4 to millions of Social Security beneficiaries, which left many retirees puzzled about the agency's aggressive promotion of supposed benefits. The email claimed the bill ensures that nearly 90% of Social Security beneficiaries will no longer pay federal income taxes on their benefits, providing meaningful and immediate relief to seniors who have spent a lifetime contributing to our nation's economy. But is that really true? More on that later. At one point, the email implied that retirees would receive 2 tax breaks. It stated, the new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries, providing relief to individuals and couples. Additionally, it provides an enhanced deduction for taxpayers aged 65 and older, ensuring that retirees can keep more of what they have earned. However, the term additionally is misleading. The tax cut is solely an enhanced deduction for those aged 65 and older. The law does not eliminate the possibility that some retirees will still owe taxes on their Social Security benefits. The SSA blog later issued a correction without clarifying the original error. The updated blog now reads, the new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries, providing relief to individuals and couples. It does so by providing an enhanced deduction for taxpayers aged 65 and older, ensuring that retirees can keep more of what they earned. Understanding the senior bonus. A new, temporary senior bonus deduction of up to $6,000 will be available to taxpayers aged 65 and older for the years 2025 through 2028, after which it will expire unless Congress takes action. Tax experts refer to this as a special personal exemption designed to lower the tax burden for many seniors. However, seniors with higher incomes may not qualify, and those with lower incomes who do not owe taxes will not benefit either. Mark Luscombe, a principal analyst for Wolters Kluwer Tax and Accounting, noted, as a deduction and not a refundable credit, it will not assist seniors who already do not owe income taxes. He further explained that higher-income seniors will see a reduced tax benefit or none at all, as the deduction begins to phase out for individuals with a modified adjusted gross income of $75,000 for singles and $150,000 for joint filers. Interestingly, you do not need to be receiving Social Security benefits monthly to qualify for this deduction. Age matters. Taxpayers aged 62, 63, and 64 at the end of the tax year will not qualify for the senior bonus deduction. They may still owe taxes on their Social Security benefits if they meet certain income thresholds, without any offsetting bonus deduction. Here are some additional rules to keep in mind when filing your 2025 tax return. Married couples may benefit more. If both spouses are 65 or older, they could each claim up to $6,000, totaling $12,000 for the senior bonus deduction in a given tax year. Filing status matters. Married couples must file jointly to claim the senior deduction. Choosing married filing separately disqualifies you from the senior bonus deduction, according to Tom O'Sabin, an enrolled agent and director of tax content and government relations for the National Association of Tax Professionals. Social Security number requirement. To claim the deduction, seniors must possess a valid Social Security number. Income limits apply. The tax break phases out entirely for single taxpayers aged 65 and older with a modified adjusted gross income of $175,000, and for married taxpayers aged 65 and older with a modified adjusted gross income of $250,000. Phase-out rate. The deduction phases out at a rate of 6% once your income exceeds the threshold. The National Association of Tax Professionals provided an example of a 70-year-old retiree who is single with a modified adjusted gross income, MAGI, of $90,000. In this case, $15,000 exceeds the $75,000 threshold for a single filer. Calculating the phase-out, $15,000 multiplied by 6% equals $900. Thus, the maximum $6,000 senior bonus deduction would be reduced to $5,100 in this scenario. The reality of taxes on Social Security. It's important to understand that insisting there are no taxes on Social Security benefits is misleading. Many individuals still need to withhold taxes on their Social Security benefits if they have other significant income sources. Neither the House bill nor the Senate version, which was ultimately passed and signed into law by Trump, included any provision to eliminate taxes on Social Security or provide a deduction for Social Security income, according to a summary of the extensive reconciliation bill provided by Wolters Kluwer. During his 2024 campaign, Trump famously suggested making Social Security income tax-free, but such a change could not be included in the budget reconciliation process due to a provision in the Congressional Budget Act of 1974 that prohibits Senate reconciliation bills from altering Social Security benefits or taxes. Garrett Watson, Director of Policy Analysis at the Nonpartisan Tax Foundation, stated, "It's fair to frame this new deduction as an attempt to fulfill the spirit of the president's campaign proposal consistent with the limits imposed in the reconciliation process." However, marketing this as exempting Social Security from income tax is inaccurate and will confuse or upset seniors who end up paying taxes on some benefits. Watson also pointed out that the senior bonus deduction applies to any taxable income a taxpayer aged 65 or older has and may not fully eliminate taxes on Social Security benefits. Since 1984, Social Security benefits have been taxed at the federal level to support the Social Security Trust Fund, which was in danger of insolvency. At best, the new tax break means many seniors will see some tax savings over the next 4 years. Howard Gleckman, a senior fellow at the Urban Brookings Tax Policy Center, noted, despite the SSA's claims, most would see their income taxes on Social Security benefits reduced, not eliminated. In a report published online on July 9, Gleckman indicated that the primary beneficiaries are seniors earning between $80,000 and $130,000, who could expect an average tax cut of about $1,100, or roughly 1% of their after-tax income. The tax deduction of up to $6,000 is projected to benefit fewer than half of older adults, according to estimates from the Tax Policy Center. The actual tax savings for seniors qualifying for the senior bonus will depend on their taxable income, which determines their marginal tax rate. For instance, at a 12% marginal tax rate, a $6,000 deduction for a single taxpayer aged 65 or older would yield $720 in tax savings. The complexity of taxation. This situation raises an important question: how can Trump assert that there will be no taxes on Social Security benefits? Retirees may need to view this as one of those statements that requires careful examination of the details. Luscombe remarked, "The president often seems to try to present a positive spin on an issue without fully aligning with the facts." The 90% figure mentioned in the SSA email appears to align with a similar claim from the White House, but it is misleading. Before the recent tax legislation was enacted on July 4, taxes on Social Security benefits, what you need to know in 2025. Despite the widespread belief that taxes on Social Security benefits have been abolished, the reality is quite different. No tax-free Social Security benefits. The recent tax legislation does not include any provisions that render Social Security benefits tax-exempt. Federal taxation of Social Security benefits commenced in 1984 as a measure to stabilize the Social Security Trust Fund, which was on the brink of insolvency. A complex array of regulations concerning age and income may prevent some retirees from benefiting from the new senior bonus deduction. The misleading narrative surrounding Social Security and tax reductions for seniors in the so-called One Big Beautiful Bill is likely to lead to confusion and frustration at tax preparation offices next year. A taxing reality for retirees. Many uninformed retirees will be shocked when they file their 2025 tax returns, asking, "What do you mean I'm taxed on my Social Security benefits?" In July, I came across social media posts from tax professionals expressing their dread about having to confront clients with the harsh truth. Adam Markowitz, a tax agent in Florida, lamented on X, "Yes, your Social Security is still 85% taxable. I know that's what Trump claims, but focus on what he signed, not just his words." Confusion reigns over tax statements. On July 4, the White House reiterated no tax on Social Security when President Donald Trump signed what he refers to as the One Big Beautiful Bill. This statement is misleading. Following this, the Social Security Administration sent out an enthusiastic email to millions of beneficiaries, which only added to the confusion. The email claimed that nearly 90% of Social Security beneficiaries would no longer owe federal income taxes on their benefits, which raises eyebrows. The misleading 90% claim. The email suggested that retirees would receive 2 tax breaks, stating, "The new law eliminates federal income taxes on Social Security benefits for most beneficiaries and provides an enhanced deduction for those aged 65 and older." However, this is misleading. The law does not eliminate the possibility of taxes on Social Security benefits. A correction was later issued on the Social Security blog, removing the word "additionally" from the description of the new law, which now states that the enhanced deduction is the only change. Understanding the senior bonus deduction. A new, temporary senior bonus deduction of up to $6,000 will be available for taxpayers aged 65 and older for the years 2025 through 2028, unless Congress intervenes. Tax experts refer to this as a special personal exemption designed to lower tax liabilities for many seniors. However, higher-income seniors may not qualify, and those with low incomes who do not pay taxes will not benefit either. Mark Luscombe, a principal analyst for Wolters Kluwer Tax and Accounting, noted that this deduction will not assist seniors who do not owe income taxes. The deduction begins to phase out for individuals with a modified adjusted gross income of $75,000 and for couples filing jointly at $150,000. Interestingly, you do not need to be receiving Social Security benefits to qualify for this deduction. Age restrictions on the deduction. Taxpayers aged 62, 63, and 64 at the end of the tax year will not qualify for the senior bonus deduction, even if they are collecting Social Security benefits and meet certain income thresholds. Key rules for filing in 2025. Married couples may benefit more. If both partners are 65 or older, they could claim up to $12,000 total for the senior bonus deduction. Couples must file jointly to claim this deduction. Those filing separately will not qualify. A valid Social Security number is required to claim the deduction. The deduction phases out entirely for single taxpayers aged 65 and older with a modified adjusted gross income of $175,000. And for married taxpayers at $250,000. The phase-out occurs at a rate of 6% for income exceeding the threshold. Example of the senior bonus deduction. The National Association of Tax Professionals provided an example of a 70-year-old retiree with a modified adjusted gross income of $90,000. In this case, $15,000 exceeds the $75,000 threshold, resulting in a $900 reduction in the maximum $6,000 senior bonus deduction, leaving a total deduction of $5,100. The tax reality for Social Security. It's crucial to understand that insisting there are no taxes on Social Security benefits is misleading. Many individuals still need to withhold taxes on their benefits if they have other significant income sources. The House and Senate bills that were passed and signed into law by Trump never included provisions to eliminate taxes on Social Security or provide a deduction for Social Security income. Trump's campaign promise to make Social Security income tax-free cannot be realized through the budget reconciliation process due to restrictions in the Congressional Budget Act of 1974. Garrett Watson from the Tax Foundation noted that while the new deduction attempts to align with the president's campaign promise, it does not accurately reflect the reality of tax obligations for seniors. The complexity of Social Security taxation. Social Security benefits have been taxed federally since 1984 to support the trust fund. The new tax break may provide some savings for seniors over the next 4 years, but most will see their taxes on Social Security benefits reduced rather than eliminated. Howard Gleckman from the Urban Brookings Tax Policy Center pointed out that the most significant tax cuts will benefit seniors earning between $80,000 and $130,000, averaging about $1,100 in tax savings. The tax deduction will likely benefit fewer than half of older adults. The amount a qualifying senior saves will depend on their taxable income and marginal tax rate. For instance, at a 12% marginal tax rate, a $6,000 deduction could yield $720 in tax savings. The ongoing confusion. This situation raises the question, how can Trump assert that there will be no taxes on Social Security benefits? Retirees may need to view this as one of those statements where the details matter significantly. Luscombe remarked that the president often tries to present a positive spin on issues, which may not always align with the facts. The 90% figure cited by the Social Security Administration appears to be misleading, as many individuals were not subject to taxes on their benefits prior to the new tax law. Estimates suggest that about 40% to 50% of Social Security recipients currently pay taxes on their benefits. Gleckman emphasized that the 90% figure is not accurate, as it assumes all deductions are used solely to reduce Social Security tax liabilities. The complexity of the Social Security system can be daunting for older adults, many of whom depend on these benefits for their living expenses. The recent communications from the SSA may only exacerbate the confusion. Conclusion. The taxation of Social Security benefits will continue to be a complicated issue for many individuals aged 62 and older. As of 2022, nearly 23% of men and 24.5% of women claiming retirement benefits were aged 62. While the earliest age to claim Social Security is 62, doing so results in a reduced monthly benefit. The full retirement age is currently 67 for those born in 1960 and later, with variations for those born earlier. Unfortunately, it doesn't take much additional income to trigger taxes on Social Security benefits, as the income thresholds for taxation do not adjust for inflation. For single filers, taxes apply when combined income is between $25,000 and $34,000, and for couples filing jointly, the threshold is between $32,000 and $44,000. The complexity surrounding these tax rules is unlikely to disappear anytime soon. O'Sabin from the National Association of Tax Professionals expressed frustration over the misleading marketing of the senior bonus deduction, emphasizing that no provision exists to make Social Security benefits tax-free.